Let's talk gold stocks now. Anna's in Mississauga. Hi there.
Hi. Hello, David. I'm a big fan. I always listen to you, and I know commodities are not a big part of your portfolio. But I'd like to hear your opinion on Gold Corp and where the price of gold is going in the next year.
Okay. So you're right. We are negative on gold. I think I've last 3 or 4 times been on said that we're short some gold exposure in our portfolios, specifically by ETF, the GDX and the GDXJ, which are indexes of juniors and senior companies. Some are better than others. You know, Gold Corp has held in reasonably well relative to the group, but I'm just not that interested in buying golds as it stands right now. If I had to buy one, we have a small exposure still to Franco-Nevada, which is held in much better than the group, and it's a royalty company that really doesn't have some of the same risks as a sector. That's probably the one that I would buy if I had to buy something. But I think that the outlook for the group, I think gold looks like it can go a fair bit lower. We've covered about 2/3 of our short in the golds just because they could bounce at any time, but they do look weak.
We will continue with gold now. Here's Jordan in Winnipeg. Hi there.
Good afternoon, gentlemen. Thanks for taking my call.
You're welcome.
As with the previous caller, I'm interested in gold in the more the short term. How do you feel about the price with the U.S. dollar currency strengthening?
So,
and with that, Barrick Gold.
Sure.
Do you believe in the management's plan of increased operational efficiency, or would that be a buy or short here?
Right.
Thanks.
So the first thing you have to ask yourself is, what is it that's going to turn around the fortunes of the U.S. dollar? You know, you had Christine Lagarde this morning, you had Mario Draghi this morning, both talking about the real concern that they have for economic growth in Europe. We have Abe in Japan saying that he's prepared to do more quantitative easing, in Japan doing more quantitative easing. So the two big competing currencies are both outright in your face saying we have a problem. So the one place, if you're a global bond manager and you have a choice as to where to put your money, don't you sell your euros that are yielding you 0.8% in a Japanese and a German bond and buy US dollars and get 2.5 or 2.3%. I mean, I think that's fairly obvious trade. So if you believe that that's not about to change, and I think central bankers are giving us a very clear message that they're going to continue with quantitative easing in those two regions, you shouldn't expect the US dollar to reverse against that other than to have a bounce. And I think then gold you have to look at the same way. There's absolutely no sign of inflation anywhere in the world. Interest rates look like they're going to continue to stay low. So I don't know, these could have violent bounces at any time, and really that's more speculating on when that might happen. As to cutting costs and efficiencies, in a way right now, that's kind of like rearranging the chairs on the deck, right? Like, it can have a difference in the longer run, but in the near term, I think the fourth quarter is going to be tough on the gold producers, especially because people have gains in other sectors, and you're going to get tax loss selling. That may be happening right now. Mm-hmm. But again, that's more sellers in the market. I would wait till, if you really wanted to do this, December, when tax loss selling is closer to done. Maybe you'll have a chance then, but that's not our strategy.
They could be cheaper. Let's get into financials. Edgar's in Bobcaygeon. Hi there.
Good afternoon. Thanks for taking my call.
Sure.
I'm phoning up Dave. I'll get his word on Manulife, and if he likes it. And when he looks at Manulife, does he look at the real estate part of it? I'd like to know that. Thank you.
Sure. So Edgar, Manulife is a big position for us. For many years we had none, and over the last year we built a good-sized position. Financials are our biggest weight across our portfolios. Specifically in our financials weight, we've been focused on wealth management. And when you look at Manulife, first of all, a big percentage of their earnings come out of the U.S., something like 70%. Their growth in wealth management in the U.S. has been very strong, 18-19%. And so this is why we like it. We think we're in a secular, multi-year bull market for stocks that will go on and give you much better returns over the next 7 to 10 years. If that's the case, you want to own things that benefit in that world. And in effect, an insurance company is a big investment portfolio. So I would buy Manulife here. Stocks hanging in like a champ in a weak market. We like their business. I don't really look at real estate. I have to tell you, I think that real estate, the excess return in real estate has been wrung out over the last 12 years while money from the equity market was looking for a return from somewhere else. And the excess return above what you get in a treasury bond in a AAA building is as narrow as it's been in 10 years. That ship probably has sailed a bit.
All right, David, here is a defensive stock as the next topic out of the U.S. So we have Don in Ottawa. Hi, Don.
Yeah, thanks, Mark. David, Walgreens in August had a big pullback, and I really don't think there was a reason for it. There's nothing wrong with the company. And I also see they've recently raised their dividend. Can I have your comments? I'd like to buy it for the next year, so I'm long-term in it.
Sure. So we really like the drugstores. You could buy Coutu in Canada, but I like the group. It's a beneficiary of a lot of demographic trends. There's been a lot of consolidation. Walgreens, has had its own consolidation theme it's been working on, and so they're working through digesting acquisition. I think this is a stock that you could buy here. It's got a good base in and around $60, and I'd have no problem buying it. We don't own it currently.
What about CVS or Rite Aid?
I think CVS looks very interesting. It's behaving better than Walgreens, certainly, as is Coutu. But Walgreens, you're probably not going to get hurt in.
And just quickly, we've got the Shoppers under the Loblaw umbrella. Does that sector, does that company interest you, or not really?
Yeah, well, first of all, we like retail.
Yeah.
Certainly, I don't think Shoppers are going to hurt Loblaw. Loblaw stock's behaving extremely well in a tough tape. I'd have no problem owning Loblaws. We own some in the portfolios.
All right, very good. Another break, and more of David Burrows and your questions after this.